Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the Chapter 7 assigned problems from the Digital Study Guide for Exercises Group B. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, so I had begun to read, there we go. I had begun to read problem 7-37 in the last video, but decided since it's a note receivable and number 3 might be a little bit more of a difficult calculation, I decided to just start a new video. Right, so it says here, on July 31st, Texas Bank loaned $475,000 on a 1-year 6% note. Right, 1. Compute the interest for the years ended December 2014 and 2015. Round the interest calculations to the nearest dollar. Then which party has receivable, payable, revenue, and expense? And then number 3, how much in total would Baldwin pay the bank if she pays the note early on January 31st, 2015? Okay. So when you're looking at the timeline, this is July 31st, 2014. This is January 31st, 2015. This is December 31st, 2014. And this here is, so 1 year would be, put it here, this would be 7/31/2015. Okay, so this is what my timeline looks like. Right. So I'm starting out the note here on July 31st. It wants to know how much interest on December 31st and 2015. So the note, it's a 1-year note, so I only have to go to July 31st, but it's basically asking me how much interest all the way to 2015 right there. And then it also asks if she pays the note off early on the January 31st, how much would be paid. So if you draw a timeline, it gives you an idea as to what's going to happen. You're going to go from July 31st to December 31st, and you're going to have interest for 2013. If it was paid off on January 31st, 2015, what would happen at that moment in time? How much, since it's a 1-year note, from July 31st to July 31st of 2015, and of course how much interest is in 2015. Right, so let's do the interest calculations first. The loan is for $475,000, so this is for 2014. Right, $475,000 at 6% interest, right, 0.06, and we want to know for the year 2014. So that's this period of time. So from 7/31 to 12/31, right? That's 5 months over 12. And if we do the math, 475,000 times 0.06 times 5 gives me 142,500. I'm going to divide that by 12. And I'm rounding to the nearest dollar, so I get $11,875 of interest for 2014. Right, 2015, same thing. 475 times 0.06, but now I'm looking at the interest for this period of time, okay, from here, December 31st to July 31st. I'm not going to December 31st. This is, it's not 12 months, right? Because the note expires after 1 year, and when it expires on July 31st. So there's 7 months in here between January 1st and July 31st. So there's 7 months of interest, not 12. And so if I do the math on that, times 0.06 times 7 is 199,500 over 12, and I end up with 16,625 for the interest for 2015. Okay, so now it says here which party has a note receivable. Okay, right. So we have Texas Bank. I'm going to call it Texas State Bank here, and Gina Baldwin here. Okay. So Texas State Bank is loaning Gina the $475,000. Okay, so it would be a receivable for Texas State Bank and a payable for Gina, because why? They owe it, right? This is something, the 475, just like in accounts receivable, right? Notes receivable is the same thing. It's something we own. We own the 475,000. When we give it to Gina, it becomes a payable for her because she owes it to us, right? That's a liability, right? So the notes receivable is Texas State Bank. The notes payable is Gina Baldwin. To calculate the interest revenue, right, we're going to collect interest. Texas State Bank is going to collect interest on that receivable, right? And of course, if that's a payable, right, the interest is going to be an expense to Gina, right, because they owe it. She owes it on the note itself, all right? So the interest revenue will be Texas State Bank, and the interest expense will be Gina Baldwin. Now, number 3, how much in total would Baldwin pay the bank if she pays off the note early on January 31st, 2015? Right? Well, she'd only have to pay, and I'm going to do this in green, on 1/31, right? She would have to pay off. Remember, she borrowed the $475,000 here on 7/31. She's going to pay it off here. So she has to repay the full 475, but she has to pay the interest during that entire period of time. So we have to calculate the interest, 475 times 6% times, in this case here, it's 6 months, right? Because between July 31st and December 31st, that's 5 months. And then the December 31st, 2014 is 5 months, plus the 1 month for January 31st of 2015 is 6 months. So it's 6 months over 12. 475 times 0.06 is times 6 is 171, and that's over 171,000 divided by 12. So she'll owe $14,250 in interest, and plus the $475,000 of principal and $14,250 in interest. So the total amount will be $489,250 is how much Gina Baldwin will have to pay on 1/31/2015. Okay? All right, that shouldn't have been that difficult. I mean, none of these concepts are really that new. If you are having a little bit of a difficult time with this, go back and again watch the theory videos. However, this was covered in the Math for Business and Finance or Math Applications, depending upon which subject you took. So go back to the student community and watch the videos for those. It's it really shouldn't be that hard. Look at the chapters for simple interest and compound interest to refresh your memory on doing the calculations for interest. Okay, so with that said, I'm going to stop the video here and pick up in the next video with 38B. And if you still don't understand something after watching the theory videos, feel free to contact an instructor.